Hello there. You know the way the government tracks down money is undergoing a massive change, and it all kicks off with one absolutely huge number, a number that's going to affect millions of us right across the UK. We're going to look at a huge shift in the welfare and tax system, a change that's been powered by some seriously advanced new tools designed to tackle fraud and error.
So who's behind all this insight? Well, this entire breakdown comes from the expert tax advisors at My Tax Accountant, one of the UK's most trusted accounting firms. They've given us the inside track to help us all get our heads around what these big changes really mean for you.
Right, let's start with a number that's at the very heart of this story, £8.6 billion. It is a staggering amount of money, and it's precisely why the government is bringing in these sweeping changes.
That's right. $8.6 billion is what the government is aiming to save over the next few years with its new anti-fraud strategy. And look, this isn't just some minor tweak to the rules. This is the biggest crackdown of its kind in a generation. It really signals a whole new way of doing things. So, that brings us to the big question, doesn't it? How on earth are they actually going to find all this money? I mean, it's one thing to set a target, but how will the Department for Work and Pensions and HMRC really identify and get back these billions, especially with all the new rules kicking in from 2026? Let's get into it. So here's what we're going to cover. We'll start with the sheer scale of the problem. Then we'll get into the digital dragnet. That's the tech doing the searching. We'll look at the new laws, what it all means for your bank account, the role AI is playing, and then crucially, we'll finish with some key advice on how you can stay compliant. Okay, first things first, let's get some context. Why is all this happening right now, and why is it so massive? Well, the numbers behind it all are pretty eye-opening.
Just take a look at these figures. In a single financial year, benefit overpayments, and that's money paid out because of both deliberate fraud and genuine mistakes, hit £10 billion. And that wasn't a blip. Since the pandemic, it's been over £8 billion every single year. You can see why this is a financial hole the government is absolutely determined to plug.
But you know, it's not just about the money. The government is also reacting to what it sees as a pretty worrying shift in public attitude. A recent survey showed a big jump in the number of people who think it's not wrong, or maybe only a bit wrong, to hide income while on benefits. And that's a social trend that the authorities are now really trying to push back against. So, how in the world do you find billions in lost cash hidden away in millions of different accounts? The answer, of course, is technology. Let's pull back the curtain on the digital dragnet that's at the very core of this new strategy. Okay, the main weapon in the arsenal is a system called HMRC Connect. The best way to think of it is like a huge digital detective. It sifts through an unbelievable 55 billion pieces of data from all sorts of places. And it's really only looking for one thing: a mismatch, a gap between the income someone says they have and the lifestyle their data suggests they're actually living. And the amount of data it's pulling together is just immense. Of course, you've got your tax records from HMRC and your benefit info from the DWP, but then it adds in bank data, sales from online shops like eBay, property records, council tax info, and even flight data. So yeah, if someone's taking lots of holidays abroad while claiming benefits that say they have to be in the UK, this is the system that's designed to flag it up. Now, the key that really unlocks all of this is something called the Integrated Data Service. For years, government departments kind of worked in their own little bubbles. The DWP's data didn't really talk to HMRC's data. This new service changes all that. It's like a central hub that links all these massive data sets together, allowing them to cross-reference things in a way that was just impossible before. But of course, technology is only half the picture. To actually use it properly, the government needed new legal powers. So let's take a look at the new legal framework that's coming into force from 2026.
So, the really big piece of legislation here is the Public Authorities Act 2025. And the single biggest change it brings is giving the DWP the power to proactively ask for data from banks. See, before, they had to have a specific suspicion of fraud against one person. Now they can ask banks to scan for certain red flags across thousands of accounts all at once. It's a game changer.
Now, this new act brings in some very specific new powers, and you'll want to hear this part because this is what catches a lot of people out. The DWP can now ask banks to look for eligibility breaches, like having savings over the limit. Their investigators can get search warrants to grab digital evidence, things like computers and phones. And in some cases, they can take debts directly from the bank accounts of people who owe money but just won't pay.
On top of all that, a new fraud bill is in the works to give the DWP powers that are much more like HMRC's.
Okay, this is the bit that really matters to all of us. What does all this tech and all these new laws actually mean for your personal bank account? Right, let's make this simple.
This is a really important point to get your head around. The DWP is not getting a live feed of every single thing you buy. They can't see what you had for lunch or that you bought a coffee this morning. What happens is, banks are asked to flag specific eligibility indicators. These are big picture things like your account balance suddenly going over the £16,000 savings limit for universal credit, or your bank card being used abroad for more than the 4 weeks you're allowed. It might even be a pattern of regular payments coming in that looks a lot like an undeclared job. But your day-to-day shopping habits, they stay private.
And you need to know, this isn't just about the big high street banks. The new rules cover all financial institutions. That means digital banks like Monzo and Revolut, payment apps like PayPal, even your national savings and investments. And did you know crypto is on the radar too? If you cash out a large sum from a crypto exchange straight into your UK bank account, that transaction is visible, and it could absolutely trigger a flag if it pushes you over the savings limit.
Now here is a brilliant tip straight from the experts at My Tax Accountant, and it's so relevant in today's side hustle world. This is something that trips a lot of people up. If you're selling things on sites like Etsy, Vinted, or maybe eBay, and you're getting regular payments in, the system might see that as undeclared income and raise an earnings flag. The advice is simple. Keep clear, organized records for everything you sell, even for small amounts. That way, if anyone ever asks, you can easily explain where that money came from.
With all this talk of automated systems and data crunching, there's a really big question about fairness. It's some robot making decisions that can change people's lives. Let's have a look at the role of AI and what safeguards are actually in place.
Well, the DWP has been very clear about this. This quote from one of their spokespeople really sums it up. The AI is just a flagging tool. It spots odd things in the data, but it does not make any decisions. Nobody's benefits will ever be stopped or changed based on an alert from a computer alone. The final call always rests with a person.
Let's break down how it actually works. Step 1. The automated system flags something that looks unusual. Step 2. A trained DWP officer looks at that flag and the data around it. Step 3. If there isn't an obvious explanation, they will contact the person directly to ask for clarification. And only then, after all of that, does a human being make a final decision. So you can see, there are human checks at every key stage. So, with all of this on the horizon, how do you make sure you stay on the right side of the new rules? Let's wrap this up with some really clear, practical advice. Okay, here are the absolute key takeaways from My Tax Accountant. First, know the rules, especially the savings limits. For universal credit, for example, having over £16,000 in capital means you're not eligible at all. Second, report any change in your circumstances straight away. This is so important if you get an inheritance or a large gift. Third, like we said, keep brilliant records for any side hustle income. And finally, know your rights. If you think a decision is wrong, you have the right to appeal. The first step is what's called a mandatory reconsideration, where the DWP reviews it internally. If you're still not happy, you can then take your case to an independent tribunal. Now, it's really important for me to say that all the information here is for general guidance. It's here to help you understand what's happening, but it's absolutely not a substitute for professional advice that's tailored to your exact situation. For that kind of expert, personalized advice, you really should speak to a professional. The team at My Tax Accountant, who helped us put all this together, are available, and you can give them a call on 020-857-8531, or you can email them at info@mytaxaccountant.co.uk. The world of tax and benefits is constantly changing, so making sure you're up to date is so important. For more clear, timely insights just like this, please do subscribe to the My Tax Accountant channel. Thanks so much for joining me.